Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. and here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. We know the Omicron cases are climbing up. It's about 1 million plus cases all around the US. California is not way behind. A lot of counties are reporting a lot of increases in those cases. Even the vaccinated and boosted people are getting affected. Of course, the effect is mild. That's what they say. But we don't know what are the wrong effects. It's like a kind of a way of saying, if you get it, don't worry. You can. It's like a flu, and that's what people say. But scientists do say that they are not sure what the impact will be long term. We have to see that as the years goes by. It's the time of the year where we have to again come back to our basics. We have to wear mask, not a regular one. Of course, a lot of people are wearing that cloth mask and the thinner mask, but now they're looking at KN95 or even N95 masks. It's very difficult. I try to wear them myself. It's not easy to talk using those masks or even wear it constantly. It's tough, but again, this is a requirement. We have to follow those requirements if you don't want to get affected by it, as well as affect other people if not affected, if you don't get affected by it. This is kind of a virus which is not only impacting you, it's impacting all people surrounding you. It's time to look into all those and make sure that we are not affecting our near and dear ones. CDC guidelines do say that you have to stay for 5-day quarantine. You have to have a quarantine 5 days and do testing and then see what happens after that. But again, just be extra caution on that account. With that, let's go into our show. We have two segments of the show. One is we talk about dollar update and also dollar topic of the show. Today, in our dollar topic of the show, we're going to cover an important thing which is happening on January 15th. Remember, we are in a tax season, tax time, 2021 tax year. Due dates are coming. We're going to talk in the dollar update. But in dollar topic, we're going to cover the estimated Q4 tax payment for federal and state and how we are going to do it, what are the details and what things one must be careful, not only from federal, but also from California. We're going to cover that in our show. Listeners, if you have any tax question, this is the time to connect with the CPA on air. So studio lines are open. Studio number is 408-912-5038. 408-912-5038 is our studio numbers. Lines are open. If you have any questions, you can connect with me, Sanjiv Gupta, CPA, on air. Let's go to our first segment, which is dollar update. So IRS has come out with the tax deadlines for tax year 2021. So for individual tax filers, the date is April 18th. As of today, I say as of today because we know things might change later on. If this Omicron, any other kind of virus does not get under control, then there's a heavy chance that this date can be extended. But as of now, we know it's April 18th. Remember last year, the date was May 17th for tax filing. For accepting the individual tax return filing is January 24th. So January 24th, the individual tax filing starts. Last year, it was February 12th, 2020. So it's an early date, early start. Hats off to IRS. By the way, the IRS watchdog, National Taxpayer Advocate, Mr. Collins, said in a press release today saying that IRS is way behind and calling for help from the Congress to provide necessary arms, necessary support to process 6.2 million returns, which was not, which was received last year, but 2.3 are still pending processing. 2.3 million returns are still being needs to be processed. So there is looking for support from the Congress to provide some people to the IRS. Of course, if you call the IRS today, it's very difficult to catch hold of anyone on the line. If you're lucky, you find someone. If not, you can start calling your CPA, your tax person, and start yelling at them, "Hey, can you guys help me? This is your duty, not my duty." But they forget the tax returns are done by them, are meant for them, not for the tax CPAs or the tax preparers. So it's their duty to call the IRS and get those things sorted out. Because if you give a power attorney, of course, there's a tax practitioner hotline, but again, that takes a lot of time. Again, just a statistics, if you're a person who believes in statistics, I just want to give this fun part, which says about the calls that they received last year. It says about 11 million calls they received, nearly tripled from previous years, and they say 282 million, sorry, not 11 million, 282 million calls were received, and the representatives only answered 11% of those calls, leaving the majority of taxpayers without help. Wow, see that, 11%. 282 million telephone calls. Wow, it's a time of the year. We think about ourselves, think about the IRS, think about the service providers. It's so difficult to get to provide those services. Unimaginable times calls for urgent actions. Definitely, we need to have more patience in handling those scenarios. So April 18th is a deadline for this year. January 24th is the starting date for individual tax filers. For what about business tax filers? What is the date? Date is already started last Friday. If you are an S corporation LLCs, you can start filing those taxes for federal and California. Of course, there are certain forms which are not updated. So in that case, you have to wait from the concerned agencies to update those forms. Certain forms are not, child tax credit forms and other forms which are not updated. And California is still way behind in certain areas like PPPs, forgiveness application, and all those things are way behind in those. So you will encounter some issues when you try to do those tax returns earlier. But yeah, if you don't have those issues, go ahead and start filing as soon as possible. Of course, you have to wait. If your refund is due, don't expect that refund to come to you immediately from federal side. California might be, but not from the federal side. And I just told you there's still over 2 million returns unprocessed from last year. And they have to still process the quarterly employment tax returns, 941s. And there are about 5 million pieces of taxpayers' correspondence still needs to be processed. So you have to give time. We keep saying on air, just bear with IRS, have patience, don't get very much high temper and start yelling, because this is a time we have to work. This is extraordinary times, calls for extraordinary actions. Just have that patience, and we keep saying that. Just be patient with IRS, with your CPA, with your tax professionals. 408-912-5038 is the studio number. This is a time to connect with CPA on air, with Sanjiv Gupta CPA. You can always have your tax question answered on air. We are live in the studio. We are live giving this show. 408-912-5038. My firm, Sanjiv Gupta CPA, has offices in Fremont, Sunnyvale, and Pleasanton, and we have a team of experienced CPAs, CAs, EAs, and accounting professionals who are well versed in different areas of U.S. tax rules and regulations. By the way, U.S. tax rules and regulations, 70,000 pages of tax code. And our team, my team, I'm very happy and very, I would say, one of those people. When I look to my team, they are definitely at the top levels. We make sure that I provide them training every Tuesday with all the updates, and they have the up-to-date knowledge and experience in dealing with any kind of complexities when it comes to tax return preparations. So if you want our firm to help you with tax preparations, definitely you have to remember one number: 510-825-7563, 510-825-7563, to connect with all the three offices, which is Fremont, Sunnyvale, and Pleasanton. And we are all there to help you out. My team speak multi languages, and they're available year round and not just during the tax season. Myself, not only a CPA, but also an experienced chartered accountant, having practiced in India for 12 plus years before coming to US. And we have done, like I said, we have dealt with it with all kinds of complexities, from individual tax filers as well as business tax filers. And my firm has been uh, very quick in providing services to our business client community in terms of PPP loan forgiveness, ERCs, and counties and other grants that came from different areas. And we make sure that all our clients do get those resources. Even for individual tax filers, we look into advanced child tax credit calculations and unemployment compensations and other things that came from American Rescue Plan, and make sure that they took the advantage of it. My website, sanjivcpa.com, SANJIVCPA.com, contains useful information about tax and financial, which impacts every individual bottom lines. You can always visit the website, sanjivcpa.com, for getting any information relating to your taxes. If you want to connect with me and definitely want to talk with me or want to set up a consultation, you can always call our office number 510-825-7563 to set up a consultation with me. If at this time, if you want to connect with me on air, of course, studio lines are open. Studio number is 408-912-5038. 408-912-5038 is your studio number. We are going to have a webinar which is happening on February 12th. 12th February of 12th. Remember this date, for 2021 tax filing tips for individual tax filers and business tax filers. And we're going to look into any update that we have that can help those people to file their taxes properly and compliant and in compliance with all the rules and regulations. So we are looking at Build Back Better plan. If that plan do come into effect, do passes before our webinar, then how it's going to impact the tax filing season for 2021. We are going to see, we are going to go through those pointers as well as other pointers for tax filing year 2021. So we're going to cover that in our webinar, which is happening on February 12th. The way to get to the webinar, you register on my website, sanjivcpa.com, SANJIV, sanjivcpa.com. So the registration for that is there on my website, February 12th. 2021 tax filing updates for individuals and business tax filers. That's our topic of the webinar. So if you're that person who are looking for information, and that is becoming, so many tax rules have passed in the COVID years, starting from Secure Act to CARES Act to PPP Portability Act to American Rescue Plan Act. Then we have Infrastructure Jobs Investment Act, and now we're looking into Build Back Better plan. So it's a confusing aspect, but we know ins and out of those acts, and we definitely can help you out in those areas. Listeners, if you have a tax question, it's a time to connect with me on air. Studio lines are open. Studio number is 408-912-5038. Let's go and dive into our tax topic segment of the show. So like I said earlier, I'm going to discuss about estimated tax payment, how to do the estimated tax payment, how to calculate first, and how to make the payment for the fourth quarter of tax year 2021, which is due, by the way, January 15th of this year. January 15th is the date. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hello.
Good evening, this is Sanjiv Gupta, CPA. You have a question?
Hi, my name is Sandeep, and actually I'm listening to radio, and I have one question for you.
Go ahead,
Actually,
go ahead, Sandeep. Go ahead with your question, please.
yeah, my question is, I sold like last year long term. Can you hear me?
Yeah, I can hear you. Go ahead with your question, please. Long-term capital
Yeah, my
gains.
question is, and actually, I'm listening to radio, and I have one question for you. Actually,
Yeah, you have to shut off the radio. Like I think you, and then you can talk to me. I'm listening to your question, please.
yeah, last year I sold around 250K long term gain stocks and plus my salary. So, uh, like, what is the difference between the long term sale and short term sale, and how much taxes would that be? I mean, is that something I can ask you right now?
Yes, yes, definitely. I can generally give you an answer because we have to look into different aspect of the case. But generally, with long-term capital gains, there's two rates applicable for federal side. There is a 15% tax rate and there's a 20% tax rate. Now, 15% tax rate comes to you if your total income from different sources like W-2 and capital gains is less than 500K. If it exceeds 500K, then your 15% becomes 20% if you're filing joint return. Now there is a 3.8% Medicare tax on that capital gains. If that AGR, if that total income plus your capital gains exceed $250,000, that amount is subject to 3.8% Medicare tax. California taxes is there's no two taxes for California. California is just one tax, ordinary tax rate, and in California ordinary tax rate goes up to 13.3% depending upon AGI. So generally, long-term capital gains is definitely a good tax system because normal tax rate may be 25%, 30% for federal, but long-term rate for federal will be 15 to 20%, not 25 to 30% in normal cases with income above 300K, married filing joint. So definitely long-term capital gains are better rates, but you have to look into 15 to 20%. And just keep on listening to this to my show. I'm going to talk about how to do the estimated tax payment on those gains shortly. Okay.
Okay. Yeah.
Thank you.
Thank
Thank
you.
you for the
Thanks.
call. That was very important discussion on the question on that long-term capital gains. People do get confused on long-term capital gains and they don't take into account the Medicare net investment income tax. We call it Obamacare tax, basically 3.8%. Listeners, if you have any call, you can connect with me on here. This is Sanjiv Gupta, CPA. For the student numbers are open 408-912-5038. 408-912-5038. Let's dive into our topic, like estimated tax payments. So this year, when I say this year, that means 2021, not 2022. 2022 is a current year. So when we talk about tax year, we're talking about last year, 2021. Now, if in 2021, your W-2 income, you're going to get W-2 very shortly for 21. Look at your W-2 income. If your W-2 income is higher than 2020 W-2 income for a reason because you exercise RSUs, you have ISOs vesting, you have vesting will take you another form, but you have exercise RSUs, you have ESPP exercise, you have a lot of bonuses, you have got commissions, so your W-2 income is much higher than 2020 tax returns. Look at the W-2 and take out the difference of that income. Then you add other things that might happen for you during the year. You might have sold some stocks, which you might have some gains. Short-term gains and long-term gains. I just said long-term gains is more than 1 year from the date of sale. From date of purchase, more than 1 year. Long-term is 15 to 20%. If it's less than 1 year, then you have to add to your difference in the W-2 income. Then what about if you sold some real estate transactions? Again, you have to look into long-term and short-term. So long-term again is the same rate, 15 to 20%. Short-term rate is we have to add to that W-2 income differentials plus stock gain differential. Plus, if you invested, last year people have done investment in different real estate, either through syndications or through different aspects in properties and through LLCs and other things. You have to add that K1, call them and find out your estimated income for that year. You have to add that one. And then you have to compare that differential with your total tax liability for 2020. I have a few callers here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Yeah. Hello, Sanjeev ji. The question is on the investment rental property.
Mm-hmm.
And when a person acquires multiple properties, so when we do the tax returns, we take, first of all, there are a couple of benefits in terms of, so you have an income coming in and you have an expenses going out, which is your payments. And let's say the delta of these two is positive number. That means it's a net profit you're putting in your pocket, right? So usually when you do this as part of the Schedule C, I believe.
Schedule E. Schedule
so
E. Schedule C is for real estate, for business income, not for real estate, which is Schedule E, which is a real estate transactions.
Oh, Schedule E. Sorry. Okay, yeah. So these two gets offsetted, right? Income and then the mortgage payment, and of course the mortgage interest is also deductible, plus the points or anything. And then what about and then how do you offset more by showing the maintenance and all those? And then on top of that, you take the 27-year depreciation as well, right?
So, you're asking a question how to show that extra expenses?
Right. For rental investment, like if you can guide us, with your knowledge, like how does it all the process work from the income coming in, rental income coming in, with the expenses, mortgage payment you're already going out, and then so how does the net tax gets calculated? Plus the by the time you take deductions for the maintenance, for the mortgage interest, or the points you have paid to get the loan, right? So, and then on top of that, there's a depreciation asset, right, for use. You can enjoy it and take it for 27 years, right?
Okay, so let me go through the quickly because we have other callers here, but let me take this generally answer that question. So when you have a rental property, you get income, which is a rent income coming to you, right? You come to your bank account.
Right.
From that bank account, you pay expenses. What are those expenses? First is interest on the loan that you've taken for buying that property, not the principal, the interest that you pay on that loan. Then you minus out the property tax that you have to pay on that property. Then you minus out the maintenance. It can be HO fees, it can be regular maintenance or like a cleaning maintenance or any kind of gardening expense, whatever you landscaping expense, whatever that maintenance required. Then you minus out any kind of utilities. If the tenant is paying, that's fine. If you're paying, then you have to minus that out. Then you have to minus out any other expenses that is there to earn that income, other than depreciation. Now, example can be maybe supplies or like any kind of plumbing you have to do or kind of other things that happens. So what about automobile expense? You're moving, you're using your car to go to the rental property, and the distance is there. You can maintain a logbook, do the mileage and multiply by 55 cents. That is also there. Then you can deduct all those expenses. That expense is expenses deducted from the income. Then you get a non-cash flow aspect of depreciation. If it's a residential rental property, you get the depreciation equal to 27.5 times 27.5% of the building value of the property, not the land. You have to take out the land, and whatever land value should be taken out. How to take land value? Take 40%, 47% roughly as a general. Take 40% of the purchase price as land, 60% you can take building, and then you can depreciate over a period of 27.5 years. That depreciation will negate your income. So total expenses, including depreciation, then minus out from the rental income. Whatever net figure you get is a loss. It will be carried forward depending upon AGI. If AGI is more than 250K, it will be carried forward. If it's less than 250K, you might get up to 125,000 if AGI is less than 150K. But if a loss will be carried forward, and you can use that loss when you sell the property. That's how this works out. We're coming to the end of the show, and we have a quick caller here. Let me take this call. Good evening, Sanjiv Gupta, CPA.
Hello. Yeah.
Hello. Yeah.
Hi,
Go ahead.
Sanjiv.
So we have a few seconds remaining. Quick question.
Yeah. So if you have property in India and if I want to sell, I purchased 10 years back, how do I transfer the money from Indian rupees into dollars? Do I need to take permission from RBI? And second
Yeah, you
question
can
is
you
like,
can quickly you
how
can
do I-
transfer that up to $1 million using the Chartered Accountant certificate from 15C and from 15CB. Thank you guys. Thank you for listening. That is, we are running short on time. I hope everybody is safe, and we will meet you next time, same times, next Wednesday, 6:30 p.m.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta, CPA, by calling 510-825-7563. That's 510-825-7563, or visit sanjivcpa.com.